Going on, guys? I'm going to show you guys a little video here, kind of outlining a trade that I took on NVIDIA yesterday. And NVIDIA continues to be the rock star of the market, continuing to push higher. Was up at prices of $740+ and what I've been looking for on some of these stronger names is that I'm looking for a pullback. I'm looking for bounce plays, right? I realistically don't want to take a lot of, breakouts. For example, the market is trending sideways or trending down. When you get these type of breakouts over pre-market highs, generally you can take them for a little bit of a scalp, $1 here, $2 there. They tend to work out very, very good. Now, when you're in a stronger environment and a stronger market, one thing that tends to happen is when you take these breakouts over the pre-market high, it tends to pull back in a very aggressive manner. And that's completely natural and it's organic and it's to be expected. And again, I've been trading for, 10 years now. 7.5 of those years have been full time. And it just comes from a lot of experience, a lot of screen time, kind of learning different market cycles. And I haven't really, even been through all market cycles. Like I haven't really seen a true bear market. We had a little bit of a bear market in 2022. But nothing, really substantial where it was very, very hard to kind of, make money in the markets. But with that being said, what I'm looking for in a strong market is always some type of pop, some type of consolidation and a pullback. And then I'm looking for either a bounce off of rising hourly support or a daily level, or looking for some type of lower time frame reversal candlestick. And I want to, kind of note this candlestick here. I'm going to take this off. If you note this candlestick here, a very aggressive washout followed by a long extended wick with a lot of buying power. Okay, so this is what I call a reversal candlestick. It's a hammer candle. Again, you can call it whatever you want to call it. But when I start to see these candles, what I do is I start to mark out the range, right? I look at this candle and I mark out this range, which you can see highlighted here in this gray box. I'd say to myself, there's a 4.5 point range on this move. We've already put in a deep pullback. If this move does continue to bounce and gets rejected and loses this area, well, this is going to be the start of a second leg down. Yes, I think everyone can agree. You get a big extended pullback, you get a little bit of a bounce. If we were to get rejected and lose this area again, second leg down. Now, there was a beautiful short setup here, but again, like I said, in a strong market, I'm kind of just ignoring these short setups. Although this was a fantastic 20 SMA play here, you can see, would have netted you, it was a $4.13 range here on this candle, or $5 range here on this candle, and goes from a low price of $735 all the way down to a low price of $725. So very, very deep pullback here, $10 pullback on the name. But again, when you're trading a stock like NVIDIA, a stock like Tesla, you have to understand that the average true range on these names is very, very, it's significant, right? It's big. These things are not just going to move around 50 cents on you. They're going to move around in dollars. So, just be prepared on the risk side of things if you are taking these trades on these particular big movers. Now, what I was looking for is as soon as we start to see this aggressive reversal candlestick here, I mark out the lows, right? This is going to be my absolute max pain. Right, that's my absolute max pain. What I'm looking for then is I'm looking for some type of green candle, right? Some type of green candle to take out a previous red. Okay. Now that's showing me coming from the wick that we do have buyers in the tape. And it is showing me that they are interested in trying to at least catch us on a short-term bounce. Now, if you look at the price of $730, those were the strike prices that I took, was the 730s. I was looking for a 1-to-1, right? Anytime I'm, going to play, $4 or $5 worth of risk on some options contracts, I'm willing to lose that as long as I'm going to get at least 1-to-1. Okay. So you can see that 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, about an hour's worth of time here. We kind of do this choppiness sideways action and boom, start to break out. Now, it's at this point here where I do sell half of my position. And the reason I'm going to sell half of that position is because I want to make sure I take risk off the table in case this does happen to get rejected and come back down. I want to make sure I'm locking in some gains along the way and have the opportunity to break even on those remaining contracts. Now, The reason why I didn't sell everything, all of my position entirely, is because at the same time you see an active 20 SMA play setting up. So your stop loss would be here. It would also be a break down below the 20 SMA and 200 SMA. So again, if you look at the range on this candle here at 8 a.m. Pacific Standard Time, you're looking at a range of around $3.50. And being that I'm already in the move here, I'm already in the profit, right? I'm in the green. So there's no real risk for me if this did stop out on this 20 play. So I can go ahead and kind of hold those remaining contracts. Now, anytime I'm holding runners, I'm not really looking for, too much. If I can manage to squeeze another dollar, another, $1.50, $2, I'm generally going to take those profits. And if we kind of look at what happens here, once we confirm this active 20 play, it goes up 1, 2, 3, and I'm going to always sell majority after 2 to 3 pushes higher of my entry. It's just how I do things. Normally when I'm looking to scalp, I'm looking for, 2 to 3 pushes higher, and I'm looking for that $1.50, $2 on Nvidia. I'm looking for that $2, $1.50 on a stock like Tesla. Those names I'm very, very confident in. When I get my setups, taking that dollar, taking that $1.50, taking that $2 extremely quickly, and then just kind of getting out of the market, breathing a little bit, relaxing, and kind of, seeing what the market wants to do. If we kind of just see what the market actually did, we never really took out the highs here. We kind of bounced, put in this little bit of consolidation. And I want to show you guys something here where we do back test, right? Notice where we back test. We back test this whole range on the initial trade here that I took off the bounce. And then it also sets up a nice little 20 SMA play here that you could have taken a little scalp on. And then towards the end of the day, when it failed, right? When it failed to take out the swing high, you can start to look for those short positions. And this did pay here into the close as well. So again, these are trades that I did not participate in, did not participate in this, did not participate in this, and did not participate in this, because this trade here was sufficient enough, right? That trade there is sufficient enough to kind of, make your money. Again, if you're looking for this type of bottom bounce here and you can get into the trade somewhere in this region and kind of ride this into this little dead cat bounce here, although it does make a lower high, there's plenty of points here where you could have made some money on this trade. Now, again, anytime you're able to catch something like this where you're making $3, $4, $5, $6 on a move, especially when you're trading options, do you really want to sit here and try to catch this and try to catch this and try to catch this? It's just very, very stressful. And God forbid, if one of those trades does fail, you're going to give all your profits back from your very good trade off the open. So again, just kind of wanted to highlight a trade that I took on Nvidia. Maybe it helps you guys. Maybe it helps you, kind of look for different things in the charts, so forth and so forth. Again, if you guys enjoyed this video, make sure to like, comment, and subscribe, and I'll see all of you guys in the next video.